So in this video, I want to talk about how you could include small cap, mid cap, and large cap, in your investment portfolio. By the time you do that, you'll be providing a kind of resilient strength to your your stock investment portfolio. So I'm itemizing the procedures and the format you could follow, the steps you could take in making sure that your portfolio is well balanced with these categories of stocks. Number one is you define your investment goals and risk tolerance. Define your investment goal and risk tolerance. If you watch this video to the end, I have a little bonus for you. Just don't click out. Just keep on watching. Okay. So define your investment goals and risk tolerance. So when it comes to investment goals, you determine, if your objective is growth, if it is income, or if it is capital appreciation. So you set your target based on all these factors. You also determine your risk tolerance. You assess your comfort level with risk, because small cap stocks tend to be more volatile, while large cap stocks offer stability, and mid cap stocks strikes the balance. That's fantastic. All right. So the balance is maintained by mid cap stocks. Number two is determine asset allocation. Determine asset allocation. So in this case, you consider growth focus. You focus on growth. So you allocate a larger portion to small and mid-cap stocks. Example, like 40 to 60%, of your portfolio to small and mid-cap stocks. This will kind of guarantee, higher growth potential. It will guarantee higher growth compared to having a larger focus on on large cap stocks. So you talk about focus on stability. So you allocate more large cap stocks. You allocate more to large cap stocks, between 40 and 60% to large caps. That will guarantee stability and lower risk. And so if you want to adopt a balanced approach, you will typically diversify your portfolio, and this will include 30 to 50% large cap, 30 to 50% mid cap, and 10 to 30% small cap stocks. So by so doing, you have that balance. 30 to 50% small large cap, 30 to 50% mid cap, and then 10 to 30% small cap stocks. That will give you the balance you desire. Number three is sector diversification. Sector diversification. And so you spread your investments across different sectors. Sectors like technology, healthcare, consumer staples, or consumer goods, to reduce exposure to a single industry. This will help to mitigate sector-specific risk. You have stock-specific risk, you have sector-specific risk. So you want to mitigate against sector-specific risk. You diversify across different sectors or different industries. Number four is geographical diversification. Geographical diversification. So in this case, you include both domestic and international stocks in your portfolio, so as to be able to reduce the impact of regional economic downturn. In the case where a particular country or particular region, is undergoing a downturn, other regions could be doing very well. So you diversify in that regard. So global exposure can enhance long-term returns. It can enhance your returns at the end of the day. Please subscribe to this channel and like this video. Number five is rebalance regularly. Over time, the value of small, mid, and large cap stocks will certainly fluctuate. So on a regular basis, you rebalance your portfolio to maintain your desired allocation. You want to maintain that percentage allocation, you need to rebalance. This ensures that your risk profile remains aligned with your with your with your goals. Number 6, use exchange traded funds or ETFs or mutual funds. You could use ETFs and mutual funds, in line with in addition to these different cap stocks. So you consider using mutual funds that focus on small cap, mid cap, or large cap stocks to easily achieve diversification. Instead of doing the diversification, instead of buying small, mid, and large cap yourself, simply buy an ETF or a mutual fund that focuses on those three classes of stocks. This fund often includes hundreds of stocks within each category, and by so doing, you spread your risk accordingly. So number 7 is monitor performance and adjust. You don't just invest and go to sleep, go to relax. No, you monitor the performance of the portfolio, and you do that regularly. You do it periodically to align with changing financial goals or market conditions. You rebalance which one is doing well, which one is not doing well. You try to rebalance so as to be able to obtain the desired percentage allocation you've earlier set for yourself, which you feel could meet up with your investment objectives. And that will not only, you adjust your allocation to be able to keep your portfolio diversified and then to be able to maintain a balanced portfolio. Number 8 is consider investment horizon. So if you have a long-term horizon, you can afford to take more risk with higher allocation in small cap and mid cap stocks. If you have a long time horizon, like 10 years and above, you could afford to incorporate small and mid caps into your portfolio. For shorter horizons, you prioritize large cap stocks for stability. You have shorter horizon and you don't want too much risk, you can, go full in, for large cap stocks. So by strategically blending small cap, mid cap and large cap stocks, you can build a diversified portfolio that balances growth potential with stability, reducing risk while aiming for consistent returns. I said I will give us a small bonus actually. Well, nothing really much. I want to tell us that originally I studied mechanical engineering. As you can see in this office, there's a steel cabinet. We have our tools, there's a steel cabinet here, and the other item at the background here, that light blue color is what is called a metallurgical microscope. All right, you want to analyze the microstructure of metals. You cut the metal, polish it, and then you analyze the microstructure under a microscope. That's a metallurgical microscope. So why am I in finance? It's just passion for investment. I've been investing for the past 18 years and I like the game. All right. I like investing actually. So thank you very much for staying this far and listening to my rambles. I appreciate that.